Welcome to this episode number 104 of Your Next Trade called today Trump Call. So not so long ago when the market was going down after the Chinese tariffs and the overall tariffs that we had at the start of April, the market really stopped to go down. Why? Because the Trump administration changed its mind or actually lowered down the tune. Why? Because the bond market was really struggling with yields going to 4.7%. And at that time, what the market was scrolling was the Trump put. So like we had some years ago with the Fed put, when the market is going down too much, we are talking stocks, or when the bond market is into trouble, what's going to be happening is the Fed will be intervening. And this is the same here, where we had not so long ago at the mid-month of April, we had the market coming down and Trump put the call, meaning the strike, which was 4850, 4900 on the S&P. So that was for the Trump put. And as the market recovered, the bond market was not that great actually, but stocks mostly went up 20% from the lows. They were flattish for the year. We can probably say that around 5,900, 6,000 for the S&P, we get the strike of the Trump call, where Trump and his administration is very keen on putting much pressure. And this is what happened on Friday, where with not a tweet, but on social media, Trump said, starting with the beginning of next month of June, we're going to have 50% tariffs on the European Union. So we went from the Trump put to the Trump call, but overall, what is he saying about the market is we're going to have going forward volatility much higher than in the previous month, at least when Biden was in charge, because you have more uncertainty. So let's start with what happened on the week-to-date asset performances. As we can see, this is the bit of the reversion from the week that we had before. Week before, very strong week where we were up 5 to 6% from the S&P. So we gave back 50% of the performance of the week before, with the S&P and the Nasdaq down 2.5% roughly. You see as well that Europe actually outperformed a bit the market despite those tariffs. So we had a weak day on Friday for Europe, down 2%. Overall, dollar down 2% versus most currencies. So we saw euro dollar going to 113, 114 roughly. Bitcoin very strong, making new highs for the week. Gold with the risk off, guess what? You get a very strong gold, up 5% for the week. WTI down on the week, and copper strong as well. So if you look now at the year-to-date industry performance, you can see the picture is more or less the same. Left-hand side, you get oil services, gold miners, risk off, but you start to see a new player, which is nuclear. So nuclear was really, really strong on Friday. Why? Because Trump decided that he's going to be pretty keen on capex, on having investment in that space. Most of the names were up 10% plus on the day, so very strong. If we look at the week to date, this is overall the same picture, very strong. So actually we don't have the nuclear in that one, but if that was in that chart, you will see a very strong nuclear week. Overall, solar down. This is the opposite. Why? Because Trump decided that renewables are not the play forward. Home builders struggling as well, down more than 5% on the week, with yields going higher. So overall, what about the sector's performance? This is S&P down 2.5%, energy down more than 4%, IT underperforming the overall market. And overall, what happens when you get a risk off like this week? You have the defensive sectors like utilities, like consumer staples that are outperforming the market. So really enough market, risk-off market with the high beta stocks that underperform the market. If you look at the rates, this is the space that the market is really looking at over the last few months. Why? because we moved to the tariffs-only story, to the budget going forward. So when we started in November, December, it was mostly about Doge and the cost cuts starting from January, February. Market really quickly realized that those cuts are not going to be that big. And actually Trump, despite saying that he's going to be cutting the deficit, is quite keen on actually running high budget deficit going forward with a lot of expenses. So market, the bond vigilante is what we call the people that will be saying, be careful with the high debts going forward. You need to be careful. And the market is pretty much looking at those deficits and making sure that we're not going to be running 5 to 7% debt to GDP. But so this is what you have here, the 4.5% for the US 10 years, which is a level that we should be really watching going forward. You don't want the deficit going way too high. I think there was an interesting paper from Goldman Sachs. If on a month-on-month you see 60 bips on the 10 years, plus 60 bips, meaning the 10 years moving up by 0.6%, that is not good for equities, and that means a two standard deviation move. So we should be looking at anything that is above 4.7% for the 10 years to see more trouble going forward. Let's look now at the Fed fund rates for the Fed expectations going forward. For December, we're expecting roughly 1.5 cut to 2 cuts. So not that accommodative if you look at what we were expecting 3 months ago. First cut, we are probably talking October, November. So growth is still there. I think the issue for the Fed going forward is if we see more inflation and if we are running a hot economy through a high deficit. If we look now at the VIX, we are now at 20%. So we flagged last weekend that we had the option expiry, not this Friday, but the Friday before. And very often what happens is we do have like a resetting of the position, but more importantly, we had to wait for the VIX expiry that happened on Wednesday. And as we're going to see later, guess what? The market really started to come down and to reverse after this massive bull run on Wednesday afternoon after we had the bond auction. So let's go with the technical analysis, starting with the S&P. We flagged that an important level for us was 5830, 5800. So we closed around this level on Friday, which is just above the 200 moving average. This is, to me, really important point. Technical. I don't have that much position these days because I think it's the risk reward is not even 50-50, and that's the same with the Nasdaq, where we are at an important level after this big move. So as you can see, this is the trend line. We are literally on that trend line that we started in 2022. So pretty much the same chart for those two. Gold is interesting because we have been bouncing after the kind of the sell-off is a big word, but we went from 3,500 really down 10% from the highs, and now we have been bouncing. Strong momentum on Friday, same as the Bitcoin, as I said, that made new highs on Friday. So that was really the interesting move from the Bitcoin versus the overall market. I want to flag as well as before the Fabulous 7. Why? Because this is more or less again the same chart as the S&P or the Nasdaq. We are back at the support of this long trend 200 moving average. So we are back to the reversion level. And I want to flag as well that obviously on Wednesday after the close, we're going to have NVIDIA's earnings. So what we saw most recently is the market was pushed higher by those Fabulous 7, by the squeeze from not the very good names, but really over the last months, the market regime was more or less the same. So let's see if with NVIDIA on Wednesday, we're going to see a bit of a change in the market regime and how the market behaves going forward. So let's go back into what happened for the week. So I want to look at the S&P 500 last 6 sessions, looking at the futures. So as you can see, you don't have much until you have this bond auction on the 20 years that happened at 6 p.m. London time, 1 p.m. New York on Wednesday. We flagged it last week. We said we have two things. We got the VIX expiry that happens just at the open of the S&P on Wednesday, and after 3 hours later, you get this this bond auction. Bond auction was not that great, telling us that the market is a bit bored of having or tired of having so much bond supply coming over and over. And we had a bit of a red flag one day before with the bond auction on the Japanese 30 years, where it didn't go that well. So it was a bit of a failed auction in Japan. But what does it tell you? We got tons of bond supply coming into the market, not only in the US, but we are talking Japan, we are talking Europe, we are talking emerging markets. Why? Because most of the countries are running high deficit. And that means every single day, every single week, month, you're going to have more bonds coming into the market. And to attract people, to attract the savings, to collect this new money, what you need to do is probably to have higher yields. And the question going forward is where the yields are going to stop. So as you can see into that chart, this is the correlation, something that we have been flagging over and over the last 18 months, the correlation from time to time between bonds. So this is on bonds, this is the US 10 years here on the right-hand side, and left-hand side, this is the S&P futures. And as you can see, the blue line and the white line are more or less the same, strong correlation. So the stock market is really following how the yields have been doing. So going forward, this is really going to be the story for the US market, how the market is looking at the US budget, how the 10 years is going to be behaving. So we had the bond auctions. As we're going to see later, we got tons of bond auction coming. We had the flash PMIs. We had the VIX expiry, as I said. So that was on Wednesday. So we do know now, if you've been following me, that the market is very much driven by options and when the different contracts are expiring. On Wednesday, as I said, we had the VIX expiry. Japanese 30 years and the EU tariffs, European tariffs that was announced here, where the market dropped from 58.50 to roughly 57.60, very quickly, and we recovered because we have a long weekend in the US. So this is for the catalyst going forward. As I just said, UK and the US are closed on Monday, so on Europe. Let's see how the European market is going to be digesting the news that we had on Friday. We have the end of the month, so this is Friday. This Friday, it's going to be interesting. The last few hours here, I just spotted, the JP Morgan color. So this is for the month of June. But as always, we need to know where are the different positioning of those big funds that are rolling this position. 5905, so 5905 for the S&P. So this is the level on the cash, and this is more or less where we went for the S&P. That is a bit of a magnet, and then we came back from this level. So for the week, market is expecting plus and minus 1.8%. We have a bit of macro with the PCE on Friday, the GDP, but to me, what is more important, and to the market, not only me, it's the NVDA earnings. We have Salesforce as well and Costco, but the most important one is NVIDIA on Wednesday after the close, where if you look at the implied volatility expected by the market, we are talking plus or minus 6.8% versus recent moves over the last 8 earnings around 8.5%. So implied move is a bit lower than recent realized volatility. And as well, what we have, and this is what I flagged here, this is the bond auction. So we have, as always, at the end of the month, more bond supply coming into the market. On Tuesday, we got 69 billion, 2 years, but more importantly, as the maturities are going to get longer for the Wednesday and Thursday, we're going to have more than 100 billion supply. So And let's see how the market behaves, because we are talking the bond market and how it's going to lead into for the stock market. So end of the month, we're going to have bond supply, we're going to have the NVDA results, and as always, the tariffs deals. So that means more volatility and, waiting for Trump to say where are going to be the tariffs. What is interesting as well from Besant and some other guys in the Trump administration, they were saying that we should be expecting in the next couple of weeks some deals to be signed, and that might balance a bit, the talks between Europe and the US going forward. So if you got any question on what we do on the 4x4 video series and or the mentoring, you can join as well the training community on Discord. Any questions, you can send me an email at greg@duponttrading.com. And overall, this is it for me for this week. Have a good trading week. Bye-bye.